Hi, good afternoon, everyone. Welcome back to the channel. I'm joined once again with Will Rhind of GraniteShares. Will, thanks so much for coming back on.
Thank you so much for having me. Pleasure to be back on.
Yeah. So first question, I've gotten this from a lot of my audience about NVDL. Would you say there's NAV erosion when it comes to funds like NVDL?
Not in the way that you talk about it on your channel related to options income. So NAV erosion doesn't exist as a concept, I think, in leveraged ETFs. To the extent that there's something that is somewhat adjacent to it. Really, the thing in leveraged ETFs is the compounding of returns. So the investment objective of something like NVDL is to provide 2 times the daily return of NVIDIA. And it does that very, very well. But the way that it achieves that is you rebalance the portfolio at the end of every day. And that over time compounds returns either positively or negatively, depending on the direction of the stock. So a good example would be if you were to look, which you may be even doing right now.
Yeah.
So if you look since the inception, which this chart may be, but
StreamYard makes you pay for it.
Oh, it does. Okay. So
well,
just off the top
it's
of my
within
head,
5 years. It's within 5 years, so we're still good.
Yeah. So off the top of my head, the inception performance for NVDL, for example.
Oh, it's phenomenal. Yeah.
Is like, just to give you an exact way, it's 1,400%.
Yeah.
Versus 697 for NVDA. So it's in the region of 2 times, but it's not exactly 2 times.
Yeah.
And then for periods, any period or any given period in between, that will depend, or that divergence will be different just depending on what the stock's doing. And that's again because when you're compounding returns, so let's say there's a trend going up, which is the best possible environment. Like every day that you rebalance the portfolio, you're reinvesting the profits, and then you're applying 2 times leverage to the appreciation plus the reinvested profits. So you're going to outperform the 2 times linear return.
Yeah.
And then the same thing on the downside, right? You're going to amplify losses on the downside.
Right.
So it's kind of a complicated way of saying that it's not NAV erosion, doesn't exist for leveraged funds, but just be careful of holding these funds longer term because it doesn't give you exactly 2 times the underlying. That's the investment objective for 1 day. Then the portfolio rebalances and another day. So just always keep an eye on the portfolio if you're going to hold it for periods longer than a day.
Yeah. Well, and there's a lot of investors on here that say, hey, if I can get anything above what NVIDIA is doing, that's
right,
great.
Exactly.
Yeah. I'm one of those people. Yeah. But what the questions I got, so a lot of my audience was noticing that the most recent downturn with NVIDIA that we had, the fund, it's like very close right here on the chart. If we zoom in like year to date, it's like at this point here, it was, and we know because it's 2x to basically the upside or the downside.
Yep.
But it's like, it seems like it's struggling to come back since the beginning of the year.
Yep. And so what we're seeing, this is a good example, right? So in this particular chart, you're showing a return for NVIDIA of 5%, return for NVDL of minus 10%. So, this is going on for 6 months, right?
Yep.
In that time, you've had a super volatile period of the market. So NVDL does, like I said, meets its investment objective every day, which is it gives 2 times the performance of NVIDIA.
Yeah.
Where it gets a little bit complicated is that the portfolio rebalances in order to meet its investment objective. In other words, every day, regardless of when you buy it, whether you buy it today, whether you buy it 6 months from today, 6 years from today, you'll get 2 times the underlying return of NVIDIA that day. But when you hold it for longer periods of time, you're compounding those returns up or down. And in market conditions where market's going down, which is what we've had this year, you're going to compound to the downside. So therefore, it's like the analogy, when a stock goes down by 50%, it has to go up by 100% to break even.
Yes.
It's like just the simple math. So if you go down harder or go down more, it takes a longer time to recover. So that's just the math around it. So it's just one of these things where, again, if you hold it over a long period of time, that can happen in different market environments. But the fund is doing exactly what it says on the tin, which is giving you 2 times return on a daily basis.
Yeah, and I'm actually looking the past month. It is exactly double NVIDIA's performance.
Yeah, and that's because NVIDIA's been in an uptrend.
Yeah.
Whereas, before, if you take the previous period, we basically, NVIDIA peaked, the previous kind of all-time high was, I think, around November last year.
Yeah.
And then the stock was kind of sideways and then down definitely for the first sort of 4 months of the year.
Mm-hmm.
And really only recently, like everything, the market bottomed in April and started to recover.
Right. Yeah.
Yeah.
Oh, did the sound go out? Sorry.
No, not at all.
Oh, okay.
I can hear you.
Yeah. So, and yeah, same thing like last year. It depends. So last month, yeah, it's like double, and then a year out, it's I guess because of the volatility, like you're saying.
Yeah, I mean, the best period for these products is where you have a trend. And clearly, if you're a long investor, not a short investor, you want a trend to the upside. So the last few weeks would be a great example because we've been, since the market bottom, we've been in a strong uptrend. And that's just the case for any stock. When you're leveraged, you're trading momentum. So that's the best possible environment. Consequently, worst possible environment if you're long and levered long is if the market's going down sharply.
Right. Can you explain, like, to a novice how this works? You were saying there's like a daily reset in the portfolio. Yep.
Yeah, I mean, if you look at the prospectus, it's difficult to really explain it without looking at numbers because it very much depends on what the stock price is. There's 2 variables. There's the return of the stock, and then there's the return of the ETF. And again, when you're doing the compounding, when you're rebalancing the portfolio at the end of the day, you're reinvesting profits if the stock has gone up on that day, and then you're applying 2 times leverage to that. So when you look at a table, it's probably easier to see mathematically how it works. Yeah. And it will start with, again, be fairly small differences over a shorter period of time. Like let's, for example, say a few days or a week. But if the path of the stock deviates massively, like it goes up one day, down the next day, up the next day, down the next day, up and down, then that's when the performance will start to diverge noticeably.
Yep. So like top 10 holdings are equity swaps for NVIDIA.
Yep. So this is just simply how we get the leverage. So to provide or to deliver 2 times leverage, we have to borrow money in the simplest term. And the most efficient way to do that from a portfolio management perspective is to use a form of derivative contract called swaps.
Yeah. And
we do this really for 2 reasons. One, because it delivers operational efficiencies in terms of getting to the 2x leverage target. And then also for tax reasons. So we want to, at the end of the day, have people experience a good outcome on the tax side, meaning that if they are a long-term holder, this could be capital gains tax, or even for people holding on the more shorter term, that we don't want to saddle them with unnecessary distributions, which they're not expecting.
Yeah, makes sense. Well, now let's talk about some other funds. Then we've talked about NVDL enough. So it looks like you have new funds for MSTR is
Yes,
one.
just
And
launched yesterday.
yeah. And so that's a very similar investment objective to NVDL.
Exactly the same, yeah. So we have the two launched yesterday, so two MicroStrategy or Strategy B, depending on how you want to describe them, but 2x long and 2x short.
Yeah. Interesting. Do you have a short NVIDIA one?
We do, yes.
Okay.
It's the biggest one in the market. So it's NVD is the short.
Oh, the NVD. Oh, interesting. Okay. Yeah, I was looking at your assets under management by fund, and it was saying NVDL and then the bar one.
Yeah.
Yeah.
Yeah, Coinbase, you see that's a big one. So
CON.
Coinbase,
Mm-hmm.
not exactly, or clearly not the same thing as MicroStrategy, but in the crypto world, crypto stocks.
Mm-hmm.
And so MicroStrategy has well been popular as long with Coinbase. Palantir, another big one. Tesla, obviously.
Right. Okay, we have some questions on the live. Let's see here. So this person owns TSSY. He said, will there be any return of capital in this fund, making it better for a brokerage account?
Do they mean TSYY?
I believe so. Yeah, it was a typo. TSYY.
I don't know is the short answer. So we have not. We paid obviously distributions first of all every month since we launched in December, and obviously the latest news is we just went to weekly distribution starting this month.
Yeah.
So all the YieldBoost funds now are doing weekly distributions. We've not had any return of capital so far. That does not mean that there's a possibility of it in the future. But at the moment, and again, the strategy is not to generate return on capital.
Interesting. I notice all the fund companies are kind of doing the weekly thing now. So
yeah, I think at least for us, I have to say that I think it's a good idea. And I say that for two reasons, is that I suppose the distribution frequency part was something that we never really had a strong view on. We probably did monthly just because I guess that was sort of seen to be the default standard in the market. And then when somebody started to do weekly, and then we had folks like yourself asking about it, we looked into it more. And because we do weekly options, it does make sense that we make a distribution on a weekly basis rather than holding that back for a few weeks and distributing it once a month. So I think from that perspective, we all kind of came to the conclusion that actually, if people wanted it, then this is a good thing. And it certainly made sense from the strategy that we were doing.
Right. Have you noticed, because this was one of the most common questions that came up with weeklies, have you noticed a difference in overall return from doing weeklies versus the monthly?
There shouldn't. What do you mean by return?
Well, when the weekly dividend started, a lot of the audience was like demanding weeklies because they said, oh, if it's paid weekly, it's like the compounding effect. I heard both sides of the argument. Some said the compounding was better monthly. Some said it was better weekly.
Okay.
Yeah.
I mean, in fairness, we've just started doing this, so I don't have a view on it. But intuitively, as we were thinking about doing this, unless somebody's thinking about it in a different way, there shouldn't be a difference. We just think of it in terms of, effectively what we were once paying once a month is now what we're paying 4 times a month. So distribution wise shouldn't make a difference. But clearly, if you're reinvesting those distributions and you're doing it at a high rate or whatever, maybe there's a difference there, but not as far as we're concerned.
Okay. Yeah, they're probably talking from a reinvesting standpoint.
Yeah.
And here's a question. We kind of touched on this already, but he says they're considering putting significant money into some of these funds, but they'd like to hear if these funds are good for holding long-term, say decades.
Yeah, I mean, what YieldBoost are buy and hold. So YieldBoost, just to be clear, YieldBoost are not leveraged ETFs. So YieldBoost ETFs, the again, just to maybe make this as simple as we can. So what is YieldBoost? It's yields boosted, and
Right.
simply put, the aim or the target is to generate 2 times the income of a regular, let's call it covered call ETF on the stock. Now, it's difficult for us to say that from a marketing perspective officially, but if you think about what we're doing, we're selling options on, in the case of, let's take the first one, NVIDIA, or it's the same for Tesla or Bitcoin or whatever. These are on leveraged ETFs on Tesla, just like we were talking about, right, with MicroStrategy or with NVIDIA. So if you think about the premium that you're able to generate from a non-leveraged strategy, in other words, you sell a call option on Tesla, right? And let's say you take a premium of $1. Well, if you sell a call option on a leveraged Tesla ETF, 2 times leveraged, the premium is going to be $2. So YieldBoost, the whole point is 2 times the income.
Yep.
And you're able to generate 2 times the income because you're selling options on leveraged ETFs. Now, most of those are 2 times, but in the case of, you see the TQQY and the YSPY, those are actually 3 times, because the underlying for TQQY is TQQQ ETF, which is a 3 times levered ETF. And for the YSPY, it's the SPXL, which is a 3x S&P. So 3 times the yield. So YieldBoost is either 2 or 3 times the yield.
Yeah, because they're not no one's really, because of the regulations, no one's really putting out like 3 times leveraged anymore. That's a good way to achieve that, though.
Yeah.
Yeah.
So it's hard for us sometimes to explain these things in the way that investors might want us to for regulatory or compliance reasons, but that's what it is in a nutshell. So the whole idea is that people just buy and hold, and these are going to spit out, really high yields, and hopefully do that for a long, long time.
And these are harvesting volatility, both the upside and the downside on each.
Great question. So again, the unique selling point with YieldBoost is that because there's so much premium being generated, that we have some of that premium, we use some of that premium to buy protection from the downside. So if you look at the performance, particularly, for example, if you looked at the Tesla, I think it was last week, there was a huge drop in Tesla, where Elon and Trump fell out. Tesla dropped 15-16% at one point during the day. So if you look at the YieldBoost versus, say, a TSLY, you'll see the difference in terms of that protection.
Yeah, it actually went up. Oh, well, that's this week, but we got to look at last week.
Yeah.
I see it. Let's see. Yeah, let's do that, actually.
So yeah, we buy puts is a short answer to try and protect against some of these
protective puts. Yeah.
So we're never going to be in a situation where, or the idea is not to protect the downside completely. If you do the last 5 days, should work.
Yeah. Oh yeah, it did outperform. Yeah, it's let's see.
Maybe more than that.
Month.
That's big, right at the end. If you do that one again, the month view,
right at the end,
you might have said it specific.
Today, yeah, it outperformed today.
Now, if you did the month, it was right on the right-hand chart.
Oh,
on the right there. There was a big, big dip.
Yeah,
and then TSYY did not absorb that dip, so just right in that bit there.
Right in the day of, yeah.
Yeah. So that's the impact of the downside protection.
Yeah. Has it worked? Let's see, like if I go since inception, what was it, December, it went live. So like 6 months ago. We should do total return. Let's do total return. Okay, yeah, about the same. Especially right
About the
here.
same, but you're getting 2 times the income.
Right. Yeah, no, that's really good. And these became weekly, right?
Came weekly is the first week of June.
I see that. Yeah, because I think someone that didn't know, they asked me why the dividend dropped, but it's because it's weekly.
Yeah, that's right.
Mm-hmm.
Went to weekly.
Yep.
So yeah, I hope that's a better outcome.
Yeah. No, it looks good. It's interesting what all these fund companies are doing. It's interesting to talk to all of you all and see, how the different ideas. Someone's going to put it all together and have like the best product one day.
I think it's hard. Our approach is that there's no such thing as a best product. You have to focus on what you want. So think of it as like tools in a toolkit.
Mm-hmm.
That there's, unless you're talking about a Swiss Army knife, and even then you say, well, that's not optimal for a lot of different jobs. It could do little things, but depending on what you're looking for. So I would say that there's a big difference in growth and income, and you really should not put those two things together. So you either want to optimize for yield or income, or you want to optimize for growth, and they're not the same thing. And so typically we think YieldBoost is all about yield.
Mm-hmm.
It's all about income. That's for the investor that wants to prioritize income, prioritize yield. If you want growth, that's a different strategy. That's leveraged ETFs. That's growth stocks. That's all sorts of other things. But it's not kind of one size fits all. So the way that I think about a lot of our clients these days is typically people think are sort of, molding into this idea of what is their portfolio, what does their net worth look like? It's a combination of growth and income. They'll have tools for their income portfolio and they'll have tools for growth, but it's not the same thing.
Yeah, no, I agree. It's definitely two different things. So far you have 5 of the YieldBoost funds out.
Yes.
And it looks like the Y SPY is the biggest one. Or no, actually TSYY.
TSYY, because that's the oldest one. We launched that one first in December.
Right.
So that's the oldest. Y SPY and TQQY came next. And then we just launched the NVYY and the XBTY.
Yep. And then I forget how many of them were there in the works. There's a lot, right?
We got 20.
20, yep.
So yeah, plenty of scope to build out the family. I think we just, again, the words got to get out more precisely. I think exactly, on the message, like the YieldBoost is 2 times the income. That's the unique selling point. And I think if we can do that, then we're able to expand the offering massively.
And some of them are, like you said, 3 times, like the TQQY.
That's right. Yeah, exactly right. Yeah, 2 or 3 times the income.
Yeah, that's awesome. Let's see. We had another question here. When will you be launching the sector-specific funds?
Which one?
I guess any of them. When's the first one? When can we expect the first one?
It's a good question. I don't think we have. We don't have anything like right in the pipeline. In terms of we put out, we typically, honestly, this is not a joke. We typically rely quite a lot on feedback from, yourselves, people in the community that come to us. And that's exactly why we eventually went to weekly.
Yep.
So if you want a specific sector, the best way is to come to us directly or through outlets like this and say, I want semiconductors or I want, gold miners or whatever it may be. And we can prioritize that launch, because sometimes there's a lot of funds that we can launch, and sometimes it's just a question of priority.
Yeah, I know. I'm sure tech will definitely be one of the highest in demand.
Yeah, I mean, to some degrees, you have the TQQQ there, which is Nasdaq. You have the SPY, which is S&P 500. So the Nasdaq SPY has a bit of it, but the more specific ones like semis, etc., that's yeah, we're always looking for feedback on what the priorities should be.
Yeah, no, we certainly see that. The feedback is implemented very well. And then this person, I guess they liked your answer. They said, sounds like Y-Spy is definitely up their alley. Have to look into the queue more.
Yeah. So yeah, both of those, they're 3x. And again, we're working on to try and explain this. It's difficult sometimes for us to articulate, how complicated this is just from a compliance perspective. Like, we're really not allowed to say that much.
Right.
And so sometimes the way that we're able to describe things is not the most helpful.
Mm-hmm.
So that's why things like this are super important, where I can actually tell you, live audience, like how to explain things. But yeah, the Y-Spy and the TQQY, those are 3x or 3x the income.
Yeah. Okay, so interesting on the protective puts and all that, but like for TSYY, so someone that bought in like January or February, what could their hopes be for like a recovery and the NAV?
Well, I think, so going back to January, we were implementing a slightly different strategy.
Mm-hmm.
And we were more focused on the downside protection than we were on yield. Now we're sort of more focused on yield than downside protection. So what we're trying to solve for is this idea of like not being 100% exposed to downside, which is you are with a covered call.
Mm-hmm.
So covered call, you get none of the upside, or you get the premium and you get all of the downside. Here we're trying to give people, some of the upside, but not expose people to all of the downside.
Right. Makes sense. Yeah, it's not all that far off in terms of like total return from the actual index.
Yeah, so and just think about again the difference, right? You're getting, part of that is because you got some downside protection, but you're getting 2 times the income.
Right. Yeah, certainly. Well, interesting. All right. Well, let's see. Do we have any more questions here? Nope. Looks like that's it. So I think that's going to do it. Great session. Thanks so much again for coming back on.
Yeah.
And,
thank you, sir.
Yeah. And we'll have you on again. One more. We want the AI specific sectors, they said.
Okay, great.
Yep.
Let me write those down. Oh.
Okay. Yeah, there you go. XLU and then SMH. I thought that was yeah.
Thank you. Appreciate it. It's exactly what we love. Like, we want to launch products that people love. It's as simple as that. Mm-hmm. People love our leverage stuff. NVDL, things is like globally famous. Mm-hmm. And we want to do the same thing with YieldBoost. We want to give people really high yields and, have that sort of enthusiasm around the income as much as we do the leverage stuff. Yeah.
NVDL is one of my community's favorite ones, certainly.
I just came back from Japan last week. I was in Japan, Korea, and it's one of the most traded stocks there as well. So
wow. Really?
Love it. Yeah.
Yeah, you mentioned you were going back to Asia or something?
Yeah, I'm going to Thailand on Sunday. So we're doing a show in Thailand and Bangkok next week.
Okay.
And again, leverage ETFs are really taking off there as well.
Interesting. Oh, we had one more. They want to know about the distribution Monday. That was our first weekly distribution, right?
Yeah. It's a bit more complicated because that's just about the timing. So it's always about the date we have to announce the X date, and then the date that we pay, which is 2 days later. So if we were to pay Monday, we'd have to have an X date that was not Friday. So it's not impossible. It's something to bear. I guess if there was a good reason for it, but I think the way that we thought about it more was to signal to everybody that it's going X at the end of the week, and then pay as soon as we can, in the next week.
Mm. Here we go, real quick, in case they missed it. TSYY is there. The other ones they can look up.
There we go.
Yep. Oh, here it is, I think. Oh, I have that up already.
Yeah.
Okay.
Yeah, and you can check out on the website. And again, apologies. Also, in some cases, we are actually transitioning to a new website. That's been something that's been ongoing, a big project ongoing for a while. So,
good to know.
You won't see really any evidence of it when you're looking at the website, but we're going to be going live with a new and awesome website soon.
Oh, very good. All right. Well, thanks again for coming back on. We'll have you back on when there's any newsworthy stuff again.
Yeah.
And,
my pleasure.
Yep. All right.
All right.
Take care.
Okay.
Talk to you later.
Thank you.
Have a great
Thanks
show.
all.
Yep.
Appreciate it.
Yep. All right. End stream.